Hello friends, this is CA Sumit Buttada. Investing in the stock market can be a lucrative way to grow your business. However, it's important to understand how taxes apply to your investment. Let's discuss taxation on the share market transactions. Today, we are going to discuss 4 important things. Number 1, capital gain transaction and its tax rates. Number 2, gains treated as a business income. Number 3, tax audit applicability and how to calculate the turnover. And number 4, business loss and capital gain loss provisions. So let's discuss point number 1, capital gain transaction and its tax rates. If you are investing in the equity shares, debentures, mutual fund, etc. with the intention of the investments and it is not a regular part of your business, then all the gains earned from these investments will be treated as the capital gain income. Capital assets are required to be bifurcated in 2 parts. One, short-term capital assets and long-term capital assets. So let's discuss about the equity instrument. If you hold listed equity shares or mutual funds for less than 12 months, then it will be treated as a short-term capital assets, and if the holding period is more than 12 months, then it will be a long-term capital asset. On sale of short-term capital asset, it will be a short-term capital gain and it will be taxed at the rate of 15% if securities transaction tax is paid. On the sale of long-term capital assets, it will be a long-term capital gain and it will be taxed at the rate of 10% in excess of rupees 1 lakh. Up to 1 lakh rupees, long-term capital gain on equity shares is exempt. So in equity instrument, equity shares or mutual funds or etc., the holding period of 12 months is important. In debt instrument, the holding period of 36 months is important. If debt instrument holding period is less than 36 months, then it will be treated as a short-term capital asset. And if holding period is more than 36 months, then it will be treated as a long-term capital asset. If short-term capital gain is there, then tax rate will be as per your income tax slab rate. And for long-term capital gain on debt instrument, tax rate will be 20%. So point number 2, income treated as a business income. All other transactions like trading in future, option or intraday trading of the equity is treated as a business. Also, if the intention of a person is always trading and not the investment, then all the income from gain of sale of equity shares or a mutual fund or a debt instrument will be treated as a business income. Profit from this business is being taxed under the profit and gains from business and profession and tax rate applicable as per your income tax slab rate. Let's discuss the compliance you are required to do if your transaction comes under the business income. Section 44AA, maintenance of books of account. When books of accounts are required to be maintained, in case of an individual and HUF, if your turnover is more than rupees 25 lakhs or your income is more than 2.5 lakh rupees. In case of any other person other than individual and HUF like partnership firm or a company or a LLP, etc., the income is more than 1.20 lakhs and the turnover is more than rupees 10 lakhs. Point number 3, tax audit applicability and how to calculate the turnover. Please listen this part very carefully. This is the most important part in our video. The turnover limit for tax audit is rupees 1 crore. This 1 crore limit gets converted to rupees 10 crore if your total cash payment and cash receipts are less than 5% of the total turnover. So the conditions are very simple. Turnover limit is 1 crore and in case of 10 crore, you need to check whether what is your cash payment and cash receipts. Are they less than 5% or are they more than 5%? If your turnover is more than 10 crore, tax audit is applicable. Now, people get confused with section 44AD and section 44AB. Provisions are very clear. If in any of the previous 5 years, you have opted for the presumptive taxation. What I am saying, in any of the previous 5 years, you have opted for the presumptive taxation under section 44AD. And in current financial year, is more than rupees 2.5 lakh and your total profit is less than 6% or 8% of the case may be, then only tax audit is applicable. So next question which people frequently ask is, sir, this year I have a loss of rupees 3 lakhs, 5 lakhs, 10 lakhs, 20 lakhs, etc. Do I need to do audit? First we need to check what are the nature of transactions. If the transactions are of equity, then there is a possibility that we can claim it under capital gain and audit is not applicable for the capital gain transaction. If F&O trading or intraday trading is there, then we need to check the turnover limit. Income tax return the person has filed in the previous 5 years, whether presumptive taxation is opted or not. So let's assume that the person has never filed the income tax return under presumptive taxation system in any of the previous 5 years. Turnover is less than 1 crore. tax audit is not applicable. Turnover is more than 10 crore, tax audit is applicable. Now, in this situation, turnover is in between 1 crore and 10 crore. Whether cash payment and cash receipt is more than 5% or less than 5%. If it is a more than 5%, then tax audit is applicable. If it is a less than 5%, then tax audit is not applicable. So if turnover is rupees 8 crore, then we need to check what is the cash payment and cash receipts. If the cash payment and cash receipts are less than 40 lakhs, then tax audit is not applicable. If the cash payment and cash receipts are more than 5%, then tax audit is applicable. Now let's assume that a person has filed income tax return under the presumptive taxation system in any of the previous 5 years corresponding to current previous year. Apart from the turnover, now we will have to check the profit percentage and current year total income. So let's assume the profit of the business is more than 6% or the 8% as the case may be, then the tax audit is not applicable. If profit is less than 6% or the 8%, then again we need to check two things. The total income is more than 2,50,000 or less than 2,50,000. If it is a more than 2,50,000, then only audit is applicable. If it is a less than 2,50,000, then audit is not applicable. So this 6% or 8% profit of the turnover condition applies in case where person have filed income tax return in presumptive taxation system in any of the previous 5 years. So if a person has not filed any time in last 5 years under presumptive taxation, then this section does not apply and audit is not applicable and no need to check these conditions. Only and only we need to check the turnover, whether turnover is less than 1 crore or more than 1 crore. With the help of this chart, we will try to figure it out, the turnover. So let's take an example. If you have traded Nifty call option 1000 quantity, buy value is 1,20,000, sell value is 2 lakh rupees. So there is a profit of 80,000. So this 80,000 will be turnover. In next, Bank Nifty PE you have traded. The quantity is 1000, buy value is 70,000, sell value is 20,000. There is a loss of 50,000. Turnover is 50,000. Axis Bank shares, these are traded intraday. Quantity are 500, buy value is 4 lakh, sell value is 4 lakh 10,000, profit is 10,000, then turnover is 10,000. Reliance Future, the profit is 4,250, then the turnover is 4,250. ICICI Bank Future, there is a loss of 7,000, then this loss of 7,000 will be treated as a turnover. So we will have to take the total of all these figures and then we will have to figure it out, total turnover for the year. Then we need to check what is the turnover limit. Point number 4, business loss and capital gain loss provisions. So for business loan, we need to bifurcate into two, speculative business and non-speculative business. Speculative business are those business where we have not received the delivery of the script. So it is applicable in only case of equity shares or the mutual fund if they are spare of intraday. And all other transactions comes under the non-speculative business. So speculative business loss can be carried forwarded for only 4 years, but the normal business loss can be carried forwarded for the 8 years. At the same time, the short-term capital gain loss and the long-term capital gain loss can also be carried forwarded for the 8 years. What is the requirement to carry forward these losses? The person needs to file his income tax return within the due date, and if the audit is applicable, then that audit needs to be completed. What is the due date for filing of income tax return? So for filing of income tax return, if audit is not applicable, then due date is 31st of July. If audit is applicable, then due date for filing of income tax return is 31st of October. Then what is the due date for the audit? So for audit, the due date is 30th of September. So I will discuss two FAQs which people ask very frequently. Number 1, sir, I am a salaried person and done the trading last financial year. I am having a loss. What I need to do? Now the step number 1 will be, we need to check what kind of trades he has taken. If he has taken a swing trading in equity shares, then it can be filed under the capital gain or capital loss head. Okay. And if F&O trading activity is there or intraday trading activity is there, then we need to check the turnover and last 5 years his income tax returns, which type of income tax returns, whether he has opted for the presumptive taxation or not, that we need to check. Then we will have to calculate his turnover and check whether audit is applicable or not. If the turnover is more than rupees 10 crore, then the person needs to do the audit under section 44AB and file return within the due date. Second FAQ is, sir, I am a business person or a freelancer and done a trading in share market last financial year. I am having a profit or loss, whatever it is, not presumptive taxation in any of the previous 5 years. Then we need to check what is the turnover from his other business also and share market business also. We will have to check the combined turnover for both the businesses. And then we will have to apply the limit of 1 crore or 10 crore as the case may be. So our informative video ends here. In this video we have discussed maximum things with respect to individuals and HF. If your assessee is any other person like company or partnership firm, LLP or anything, so take a consultation before filing of your return. Again, request you to please consult your CA or a tax consultant before filing of your return or take a professional help. Thank you for watching this video. I hope you found this video very informative and enjoyable. If you have any questions or comments, please leave them below. Thank you, and I will see you in the next video. Thanks.